Hi everyone, in this video we'll do a brief review of Airbnb's third quarter earnings results that had investors not very pleased with the company after results were announced. On the day following the earnings release, Airbnb stock was down roughly 10%. So let's take a look at the results and try to figure out what were investors not pleased about. So Airbnb is a worldwide travel facilitator, and as you may already know, travel came to a halt at the pandemic's onset, and now Airbnb is benefiting from the so-called revenge travel that people are conducting, taking trips that they were delaying. Overall revenue increased by 29% in its most recent quarter to 2.9 billion. Earnings per share jumped to $1.79, and that was up from $1.22 last year. Cross-border nights booked increased by 58% as COVID restrictions ease. This was the part of this business that's been the slowest to recover, is the cross-border travel. These still have COVID-related restrictions in place in terms of traveling between countries and quarantine requirements and delays and testing and all of this, and that's causing people to not book those international trips that they would otherwise do. But now, as these restrictions are easing, it's becoming easier to travel, it's becoming more convenient, and of course pent up demand for travel has yet to fully rebound. From 2019 to 2020, worldwide spending on travel collapsed from 1.5 trillion all the way down to 610 billion. In 2021, it recovered to 950 billion, but it's still more than 500 billion below pre-pandemic levels. So even though it's bouncing back, it's still significantly below trend. And so Airbnb could benefit from this rebound over the next few years. One of the areas Airbnb sees a tailwind from is from long-term stays, which consisted of 20% of total nights booked. And this is helped by remote work. If you don't have to be in close proximity to your office, you can work from other destinations. If you're a resident in Los Angeles, but you don't have to commute to your office, you can take a trip to San Diego and work from there for a few days, especially if your remote working days are flexible and you can choose Friday and Monday, and so you could take a long weekend to work from another location, and so that's helping Airbnb. Cash flow from operations was 966 million. This was up from 535 million in the third quarter last year. This is great news for investors. The company is expanding, and it's not really having to invest in making new hotels or resorts because the company runs on an asset-light business model. As demand accelerates, it counts on bringing on board more folks to list their properties on the platform, and then Airbnb just takes a percentage of the revenue that gets transacted on the platform, and so this is conducive to cash flows, and you see cash flows from operations increasing robustly year over year. Airbnb has 9.6 billion of cash on hand as of September 30th. That's up from 8.2 billion from December 31, and this is helpful, right, especially right now because interest rates are rising, and so Airbnb is seeing its interest income rise. Interest income as a percentage of net income was roughly around 5% in the most recent quarter. That was up from a negligible amount this time last year, and that's only going to increase as interest rates. The Federal Reserve just announced today that they're raising interest rates another 75 basis points, and so that's going to help Airbnb earn some income from this cash on its balance sheet. So looking at this, it's hard to see what investors did not like about Airbnb's third quarter results. Revenue was up, earnings were up, cash flow was up, cash balance is up, everything looks good. But the one thing that I didn't put on here is what investors did not like, and that was the forecast for next quarter. Management's guidance for next quarter was not as optimistic as the market was hoping for. And so that's what's causing the stock price to fall 10% on the day following the announcement. That said, I've been making videos about Airbnb for several months now, and I've been writing and researching Airbnb for several years. And what I've been consistently saying over that time is that the travel rebound is not going to be all of a sudden. It's not going to turn right back on like a light switch. It's going to likely take some time to recover back to pre-pandemic levels. And so you may have quarters where revenue doesn't accelerate as much as you would expect. However, looking longer term, if we zoom out a little bit, overall spending on travel is still $500 billion below where it was in 2019. In other words, it's roughly 50% below where it was in 2019. And so that's going to come back. Eventually, that's going to come back. It's not going to happen all at once. It's going to take a few years. So you got to be patient here if you're an Airbnb investor, and you can expect travel spending to recover over time. Now, Airbnb is one of the stocks I have recommended as a buy. And following these third quarter results, I will reiterate that it is still one of my buy recommendations. I like the quarter's results. I like the earnings growth, revenue growth. I don't mind that revenue growth for the next quarter is looking a bit choppy. That was to be expected. I expect longer term, over the next 3 years, for Airbnb to experience solid growth as worldwide spending on travel recovers, as COVID related restrictions ease. So quarter over quarter, I fully expect there to be some choppiness, especially as macroeconomic headwinds impact several parts of the world. I expect there to be some choppiness in quarter over quarter demand. However, looking longer term, over the next 3 to 5 years, I'm bullish on Airbnb's top line and bottom line growth. So I will reiterate, Airbnb stock is still a buy right now. Okay, so that's all I've got for this installment of a earnings review. If you think I've added some value to you, please go ahead and hit that like button. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.